Well, yeah, that's the case. I expect him to go live. I thought you're like, yeah, he said so. And otherwise, if he goes live, I can just, you know, show the live stream here. Where is it? You know what? I'll open the live stream here, and I'll commentate on what I think about this. If the video is online, it's not working yet. Yeah. Okay. Okay, we see bearish rejection, by the way, for Bitcoin. When you see signs like this, even though it's a 5-minute chart, it means that there is resistance here, okay? Candles like this, that should signal you, okay, resistance, resistance, resistance. Should give you a signal. You don't fool yourself. Let me promote this. Okay, I guess I was doing Cardano, right? Yeah. So yeah, Cardano has this pennant forming. Let me pop out the chat. Pop out chat. Second, guys. Read you guys. I'll quickly finish Cardano and I'll switch back to Bitcoin. So yeah, that could be like 2618, boom, ran this, resistance level here. Oh shit, it's on auto skill. Is Eric a live stream or is it this video? Okay, I'll pause the music and then I'll put on his video. I guess it should work, right? It should work.
Alright, hi everyone. Hopefully this works. Third time's a charm, hopefully. It's still not working?
Oh, he's live. Is he live, guys? Oh. Is this? But it's a video.
Alright, hi everyone. Hopefully this works. Third time's a charm, hopefully. It's still not working? Oh. Still not working, huh?
Oh, that's really typical.
Oh my gosh.
Oh shit. Yeah. Well, yeah, that was a stream, guys. Oh, the chart guys are live. You want to guys watch some League of Legends? You guys want to watch some League of Legends? No. Give me a second. I'll just switch back to Cardano quickly first. So this looks like a pennant is forming. So this could be a 1. This could be finished 1 wave 2, 1 2 3 4 5. But it's a 4. It is a 4. I don't think it is. I believe this is 1, 2, 3, 4. Side of it, pennant, boom. We get one more up, and what we would do then, if this is, this could technically be 1, 2, 3, 4, but it would be really deep 4, which is very, very unlikely. So to project the 5 of the 3, you take the fib extension from the 2 to the 3, and take it to the 4, which is probably here, and gives you the 5 here at the 618. That's the most likely, by the way. That's the most likely, because you take it from the 4. Just because I have the 4 here, it actually the 4 is a triangle, and you have that an E. So it gives you guys a kind of idea, but I wouldn't. Well, you could play this like A, B, C, D, E. See what I guys mean? Take it from the E, and what this would be here. So if you would long this, and I gave you guys this today, if you would long this, for example, you take it from the E, stop loss at the C. Oh yeah, you target. You really like those shit coins, guys. Jesus Christ. Yeah, I'll take a look at 0x, but it's gonna be the same chart. So they at least target the 121 from AB to E, which is nice because it falls below this resistance, so we take it slightly below it. That's a good risk reward. So yeah, if you wanna go long on Cardano, you could take this trade, a pennant formation, but you need to stop yourself out at this C. Okay, it's really important you stop yourself out. It's still a significant stop loss in my opinion, 3.7%. But yeah, the win is 14%. This run up was of course with Bitcoin and this stupid Coinbase news, which was So let's say this is all some shitty ass rising wedge, and everyone is getting fooled right here, which is also very likely since this already has finished, and this is very parabolic. Then 618, boom. Then we will get this A to B, 786, makes a lot of sense. And then we get this buy range here, okay, for Cardano. Okay, maybe Eric is gonna go live again, and if he goes live, I'll show you guys. So oh my god. Let me check if there's people here. Okay, Bitcoin, EDP, Cardano. Okay. So yeah, if you take this trade, you need to stop yourself out if you get below this swing low. Well, there is this swing low, but would you really risk that? I wouldn't. And here you would violate already the one wave, so this could be an ABC. So yeah, you have this hard support region right here, the 71 and the 786. So I rather would go long here and still have this target, so this could go up to here as well. But yeah, this one you target the next swing low from here on the left. It's not really the best trade either, but yeah, this is the best you're gonna get. Is that if you're gonna go long on Cardano, is here with slightly below the 1-to-1 extension of the A to the AB to the E. So this is a potential good trade setup. If it hits the C, this one would be violated, so then you would expect this to move one more down, and then we would end up here. So that gives you an idea. Did we already hit it? Yeah, on some exchanges we did. Okay, still good. Where was it going? Somebody asked 0x, right? Yeah, but that was my problem was that Bitfinex didn't yet. So Binance did, but Bitfinex didn't. And Binance has those early lows, and then the algos, yeah, they go there, and then you're like, okay, nice, I bought it, I bought the dip, and then like just like what I thought. Oh my god, just right in front of me. Is that like Binance has it earlier, but Binance is not the leading indicator. Binance just has it on accident earlier, and Bitfinex still has to have it. And if Binance already had it, it's very likely that Binance bounces first with Bitfinex, and Bitfinex put in a lower low than Binance after. So yeah, it looks like we're not done yet, guys. Looks like we're not done yet. Yeah, no, but it's okay. It's like I said, like I was starting to get interested in Bitcoin in this red box. I'm kind of interested at 7.7, 7.8 ranges. So I'm gonna try the long as well. Yeah, Eric is online. Actually, I wanted like Eric technically Eric could join me on Discord. Give me a second. Okay. First I'll go to 0x first, okay? We got 0x is still at the same shit spot. It didn't even move. It didn't even move. Like, oh my god. Yeah, he finished this. No, there is nothing. No, Eric is online, but Oh, look, it's Papa Whale. It's Papa Whale. He's there. Yo, Eric, I showed them like live when we were here, and I told like Eric, do you know this strategy? I'm gonna show you one of my strategies, and like maybe there's some new people here. I'll just go while Eric appears. 7.7, 7.8 ranges, something like that. I would like right now. This is 5 minutes. We already had some bullish divergence, but I like to look at the 10-minute chart, and I don't see this as good bullish divergence. I like to see stuff like this. Like I like to see some time between it, and yeah, that just gives me some solid information. Like I could like technically this is some divergence, but looking at this could be just the third wave, and then we still have 5 waves. So we can still have 1 wave more. But I'm gonna I showed you guys already the trick to a couple of people today. I go to the 50-minute chart, and this is something Eric probably agrees on. Yeah, we just wait, just have some patience, wait for that daily close, and yeah, exactly what Eric says. This is probably the third wave. It was really sharp as well. Eric, I just hope I just hope this is not gonna be the case, man. That this ETF denial, and this fourth wave finished here. Your fourth wave is gonna be the first to third wave 4, 5, 1, 2, 3, 4, 5, and we just say, yeah. and then we just end up here. But I believe we're gonna have some bounce here at the 7 ranges here. Like, we got some support here, we got weekly support here. There is a lot of support that should give us some bounce. Okay, I'll go back to guys about Elliott waves, and I just, people already saw this today, but you guys know what this is. This is profit and losses, and this is risk management. Okay. And Eric should know this. Eric is the guy, I let my winners ride, and you get this nice green dildo. But these are the times you get stopped out, okay? And this is part of this game. Like, everyone can learn how to do TA in I'll take this away. Everyone can learn how to do TA in a couple months, easy. Yeah, a couple weeks. We can show you guys, you know. I can tell you, like, okay, we see some bullish divergence here, and we see higher price action. You just enter, you know. But how do you stop yourself out? How do you cut your losses? How do you take your profit? This is where your risk management comes in, and as how fucked up to say it is, it's trading is fucking hard. It is. It's not supposed to be easy. Everyone can make a chart. Everyone can make it look really bullish or bearish. Everyone can do that. But this consistency, stop yourself out, stop yourself out, stop yourself out, let your winner ride. Stop yourself out, stop yourself out. Yeah. So it's all about getting these high probability setup with a good risk to reward. For example, the 8 to 1, it's insanely high, likely to happen. Yeah, everyone can. You just drag this long position to infinity, and yeah, oh, I got a good risk to reward. So so give you an idea. So these are patterns Eric knows about, and I'll take these ones off first. So these, I know Eric likes to play these triangles as well. And if you play these ones correctly, according to Elliott waves, and I don't know if Eric uses this, I don't know. And if he probably knows it, because he knows Elliott waves and he's not stupid. And so this is an ending diagonal, and this is a symmetrical triangle. And I already told a couple people this before. There is a way to spot them, and that's when you see this coming up, and you take this wave from tracement to here, and you see a fib relationship between all of these waves. But you see this one wave, and you see the third wave is actually slightly shorter than the first wave, and you see a retracement between the third and the second wave, which is also really technical. And you see the fifth wave. Okay. So from Elliott wave, we know that wave 3 is often the longest, never the shortest. So in no way or shape or form your third wave can be shorter than your fifth wave or your first wave. It has to be either the longest or not the shortest, so it can be in the middle. That's when these ending diagonals are lovely to play, because when you find this first wave and you see the overlap happening, and you don't know for sure, but you see overlap happening, and you see a VIP relationship, so Fibonacci relationship between this wave and this wave and this wave. I'll go over it. Give me a second. Then we measure the first wave to the second wave, and we see shit. The third wave did not extend more than 100% of the first wave. So we know that the third wave is shorter than the first wave. So what do we know about the fifth wave? We know about the fifth wave that has to be shorter than the third wave. So it cannot be more than 100% of the third wave. So it cannot be more than 100% of the third wave. At least. So therefore, we know if we have price action extend above the third wave, and we see this bearish divergence, like for example what Eric said about, like we see bearish divergence here in the RSI, for example. This, by the way, my bad, this is bullish divergence because quickly, yeah, there we go. We see lower prices with higher lows on the oscillator. We see here on the percentage B, we see it's really stretched out. It's really like there's a lot of sell pressure, most of the time too much. So that gives you some kind of confirmation that we are nearing a bottom. At least we know that there is how you say it, We're actually gaining strength in the market. There is bullish momentum coming in. This is too stretched out to the downside. It's very likely to snap back like an elastic band, and that's where you see this boom, stretch down, stretch up. And this is where percentage B actually helps you to catch a quick scalp. Okay, this is an indicator that is a lot of people don't even use, but I'm giving you guys this one. And it's not even mine. I mean, like, of course it's just out there, but it's just, you know, it's a helpful one. So back to this one. Since wave 3 can't be the shortest and wave 1 is already 100%, the third wave is less than 100% of the first wave, we know that the fifth wave has to be less than 100% of the third wave. So how can we play this? And how can we leverage this? Well, it's actually really simple. It's more simple than... it's sadly enough one of the most simple plays there is. So you start to ladder all your orders above the third wave, you know, a little bit above it, because most of the time 618, 65 of the third wave at least. Most of the time. So you start to ladder your shorts, and your stop loss, oops, and your stop loss is at the 100% of the third wave. Okay? Because if it hits 100% of the third wave, your count is completely invalidated. You are wrong. You are stopped out. Okay? You lost. Simple. It's really simple like that. And the nice thing about ending diagonals is that they most likely come with a heavy correction or a heavy bounce. So you don't even have to. You can target 618 of the entire structure, or at least 382. But most of the time 618. Because it's gonna do the entire structure most of the time. You already have a 3 to 5 risk to reward. Actually, you start to ladder up more because you see it coming back up. Tighten your stop to the 100%. Target the 618 to the 65. Boom. 5.5 to 1 risk to reward. And these are the setups you can just fail. You can fail. Boom, fail again. You only lost 0.37%. This is why Eric is able to get out a quick scalp with only 0.3% loss, which is only his fees and a quick loss. Okay? This is one of these reasons. And the funny thing is, you can let these winners ride, because most of the time these trades you can actually highly leverage, because your stop is so tight. Your stop is so tight, you can actually highly leverage this. You could, but you shouldn't if you're an unexperienced trader. And these are one of those trades where you can let your winners ride, and you actually end up at retracing the entire structure, not just this one, because this is most of the time in the C wave or an ending fifth wave diagonal. So you take the entire 5-wave structure, so this one first, and then take the entire one and target the 382, which is most likely the negative 236 of this, so it would be probably something like this. So I'll take this one to fifth, and I have to post this one negative, as you guys can see, close to it. Okay. And this is not just some risk to reward. I just take on top of my head, but this is reality. These are trade setups. If you find them, they are there, and you let your winner ride. And this is how you get this stuff, because this is what you want. You want to get stopped out, stopped out, boom, stopped out, boom, and your overall profit is that you make 8% or 9% in a trade, but you lose 1 or 2%, maybe less than 1%, because you play these triangles. And then I'll give you the example of the symmetrical triangle. And the thing is that you have your stop loss at that 100%, because you know you are wrong, because you hit more than 100% of the third wave, since it's shorter than the first wave. It's really important to keep this in mind. Once you have this methodology in your head, and you start to see these patterns, you start to see these rising wedges, you start to see volume drying out, you start to see the RSI to show bearish divergence, for example, higher prices, lower highs on the oscillator. You start to get your confirmation, you have your stop loss in, boom, you're ready, and you catch that insanely nice trade. So for example, let's take the symmetrical triangle. This actually it works the best for these two type of triangles. is, for example, if you this is the throw over I'm talking about, is that you have this contracting price, contracting volume most of the time, or volume drying out, and the fifth wave cannot be 100% of the third wave. So you can get this throw over to like here, but it should not ever hit that 100%. If it does, you counted it wrong, and you invalidate your own count. So who are you trying to fool? Well, you can't fool yourself with this stuff. Boom. Give me a second. I don't know if Eric's still here, but I'll give you the one with the symmetrical triangle again, and I showed other people this as well. Is when you see this fib relationship, and this most of the time comes from here, from a little bit higher. See this continuation pattern, and I believe Eric, I believe Eric knows this stuff as well, since he's an elite wave trader. Yes, you include the wicks of the length of the waves, unless it's there's yeah, you include the length of the wicks. Yes, you do. You have to, because otherwise because since wave 4 and 1 can only overlap in the diagonal or ending diagonal, or the C position, or the end of the fifth wave, or the end of the C wave. So yeah, you count your wicks unless you see some wick that is insanely weird on that price action and is not visible on the other exchanges. Then you can just, you can take it off of the equation. If it's some kind of weird wick, you will notice it, in my opinion. But most of the time, you should never take the wick. You should always measure the wick with it. So for a symmetrical triangle, so this is the third wave. You see this fourth wave coming down, okay? And then you start to see this. Yeah, exactly. You see ABC following, and you see this fib relationship. You see this coming down. You see, oh, boom. This one hit to the 618. Okay. So, boom. This one hit, oh, fib level, nice. But it starts to, you start price contracting, and volume starts to dry out, or starts to squeeze as well. Okay, so then you start to see, we see this price contracting, we see volume contracting. And then we see this. We see three waves already formed. Okay, we see ABC, or ABC. This could be actually be 5 waves, but ABC, ABC, ABC. Okay, 3 wave structures. Keep that clear. 3 wave structures, zigzags. You see zigzags, just like this. So you see zigzag, and you see some fib relationship. Doesn't have to be really accurate, but you see this. And the moment you start to see this, and you see that the C falls short, and you see it coming back up, and you start to see one more zigzag coming down, that's when you start to enter a long position or a short. It really depends on how you counted it. And why? Because in a symmetrical triangle, E cannot retrace more than C. There you go. Since it cannot retrace more than C, you enter a long position on your E. You have a really tight stop loss. Give me a second. MACD crossing over from the downside. Is it a good formation or a weak one? Depends. Is it on the daily? If it's on the daily, it would be a good signal. But if it's on the 5-minute or 10-minute chart, I would say it's a weak one still. It's a low time frame, but it could cascade into higher time frames. So if you see it on the 1 hour, I would say yeah, it's some kind of signal, but I believe there's more downside left. But how? So for coming back to this, no, I wouldn't go for that one yet. The most of the time it could be get one more snap down. You can get another stretch down and then overlap and then boom. And you want to check the histogram, by the way. You want to see the histogram. I'll give you some idea how I would draw it. Like if I see the histogram, and I'll come back to this one, okay? If I see the histogram, so this is the MACD. So I'm talking about the histogram, right? This is the MACD, negative ticks, boom, pressure, negative ticks still, boom, start to get positive ticks. But this is the, my bad. This is the baseline. and you start to see higher, what the fuck, higher lows on the histogram. But you see lower lows on price action. That's also bullish divergence. You see that the histogram has positive momentum, then it's very likely for this signal to, and it's very likely for this signal here to get an overlap after this, especially when this one is really stretched out like this. To give you an idea, this is just from my experience, by the way. It's doesn't have to be true, but it's what I always see. But it looks, I guess it is true. So go back to this triangle formation. Since the E cannot retrace more than the C wave, it means you're properly counting the A, B, C, D, E structure. That means the E cannot retrace more than the C. And if it does, your count is invalidated, you're completely wrong. But let's say you catch the E, how do you project or target? Well, you take the fib extension from the A to the B to the E and target 1 to 1. Look at this risk to reward, baby. Look at this. I would take this trade any day. I'll throw 10 grand on the table, take this trade 5 times in a row, and win it once. I got my losses back, got profit, and I'm done for 2 days in a row. Basically. So that gives you guys an idea. So this, if it retraces more than C, you will get stopped out because your count is invalidated. You know you are wrong. Yeah, this is the, so this shows where you are completely wrong. Your count is completely structured wrong. Price is most likely gonna continue this way, and you get stopped yourself out for what? 0.24%, 0.3%. This is where the disciplined trader wins from the lucky trader. Okay, if you believe every trade of yours is gonna be like this, but you're not willing to stop yourself out like this, then you will never get this, because you will get losses like this. And your losses will dwarf your wins, okay? This is reality. This is reality, and this is where everyone starts to fail every time. I can give you the best setup, or Eric can give you the best setup. Yeah, apparently the ETF for those twins got for the Facebook twins or the Winklevoss twins got rejected. So yeah, I guess that gives you a reason why we see 50 Bitcoin, 12. We see massive sell orders, massive. We see this. Whoa, 500 Bitcoin bought. Yeah, that's and they drop it slightly below the E. But you want your stop loss below the C, because if it hits the C, then yeah, you get stopped out. So for example, if we go back to this, Eric, did you know about this? You could always target this. We still have an insanely good risk to reward. But breakouts of stuff like this are most of the time very, very vicious. They are really fast. You have to directly take your profit and get out. And these are those trades. When you spot these triangles, symmetrical triangles, you start to ladder it in at the E wave. Yeah, exactly, continuation pattern. But it depends, of course, you know, if this is the third wave and fourth wave. Where did I learn to trade? Yeah, but exactly. Most of the time they are continuation patterns like this. They are nothing more that you see. Let me show. 1, 2, 3, 4, or 3, 4, and then we see this 5 somewhere here. This is how it likes to be, and then this one really deep. This one hits to the 3A2 level, and this one doesn't hit this one. So that's your other invalidation. This one, but this is your invalidation when you start to see this, the price squeezing. No, because if yeah, it looks like the perfect for whales to take the stops. But if you get stopped out here, who cares? Who the fuck cares? You already lost when the moment you enter a trade. You already lost on the fees. So you better stop yourself out if you try to enter a trade like this. So you wanna enter a trade and then you wanna have your stop here and get dwarfed by me because I can re-enter at this zone here. Because you will get stopped out and I will enter in your stop loss because you're not applying the rule set. Well, that's gonna happen. You're gonna lose. And one thing for sure, you're gonna get stopped out in trading. Ask Eric. Ask Eric how often he stopped. Well, Eric probably lattices himself in and can manage his risk. If you only go in with $100 or $100 here and then go with $1,000 here, then you know there is nothing to get stopped out for. Hey, well, you could stop yourself out earlier. For example, for Cardano, you could, but a stop loss is there to invalidate that you are wrong. So that's you let the stop loss there, you let it run. And well, sometimes if Bitcoin just starts to sneeze to go straight down to 6K, well, yeah, then in that case you should rather stop yourself out quicker. But otherwise you shouldn't. Otherwise you shouldn't. So these two plays, if you master them, and you only try to search for these plays every time you look to the chart. Every time you open a chart, and I'll show it like this, okay? This is Bitcoin Tether. Yeah. Okay. This is a good example. Huh. Boom. This is on the daily. I'll switch to the 4-hour. Every time you open a chart and you look for stuff like this, and you see like, oh, boom, I see some triangle here. Okay, we're gonna. You know what? I didn't apply this one here. I didn't took this trade. I actually got This is where I got liquidated. The first time in my entire life is where I got liquidated was here. This crash down. At least I got liquidated here. But I'll show you guys. Oh, we're starting to tumble down. We might crash down more. Give me a second. I'm gonna give you guys an example. Yes, it is a continuation pattern, but most of the time, this is a good example, by the way, I think. Nice example in real time. Okay. Zigzag, zigzag, with mini triangle in this one actually. And let's check if this one validates what I said. Well, at least hit the 618. And it didn't hit the 1, but it hit the 618. Let me check. Boom. And of course it didn't, because this one went down. So you guys know this one just went completely down and transformed in a descent, in a rising wedge kind of formation. But it gives you guys an idea that, for example, if you guys took this trade here, oh my god, man, this hurts my eyes to see this. It really does. Look at your risk to reward. Let's say you only conservative, you know, it's conservative. You target the 618 of the FIB extension. You still had an 8-to-1 risk to reward. That's incredible. And look at your stop. It's so small. It's so small. Example, if you hit the top. If it actually hit once. Yeah. No, I believe we all knew at this point when we were here that this was nothing else than a continuation pattern. Was nothing else than this. It starts to look like this dump is there is some Bitcoin bought. By the way, you guys said like, oh, 120 Bitcoin just got filled on 7088, but there was 500 Bitcoin bought here, and I believe this was someone else filling his his own short position, guys. So guys gotta need it. Someone was probably filling his own short position with 500 Bitcoin because they knew the news was bad and they maybe pushed the price down. It's just an idea. It doesn't have to happen. I was showing you guys here that here was an example that this just clearly played. Okay. Then the sad part is that the likelihood of that this pattern played, but then it failed here, and we got boom the 5 waves down. But yeah. Oh boom, probably another example. It's not really the best example because is this really a triangle? Yeah, technically we could say it is, but then we have this one, A, B, C. No, not really, not really. But it's a triangle formation. But we could still apply the same kind of rule set if we wanna enter in a triangle formation. Then your stop loss will be here, and we target the 1-to-1 from this. But this, I wouldn't call this a triangle, but it looks like a triangle formation. Well, yeah, you could always calculate both, Becky. You could calculate both ways. Give me a second. I can't even go more to the right. But it would still be from A to B to E. But you gotta acknowledge that it's a. The thing is, like, this only works for contracting or symmetrical triangles as a continuation pattern. So you follow the trend, and if it's a downtrend, then you play the trend. Okay? No, I use Elliott wave. I use I look at the why is my volume not showing? Oh, it should be showing. A, B to E, okay? But then the thing is that you admit that you... Okay, cheers, mate. Have a nice day. And I hope you took profit at 8.4k. Like you should. And didn't went long. Like every fool. So it still applies the same rule set, Becky. And so you could still... You don't even have to use the Vib extension. You can just measure from the biggest range inside of the triangle, then clone it, and then where it starts to try to leave the triangle, you put it in the triangle, and then target that as your first target, as a 100%. Okay, that's where your target should be. That's where you should take profit for the first time, and then maybe add the retracement if you really see that it's really furious, and then boom. Doesn't matter if you missed it. There will come another one, and another one, and another one, and another one. It's all about patience, man. It's all about patience. It's really about patience. Yeah, I'm gonna make a video about Elliott wave. I'll try my best to do it really in depth, and I don't know if this was useful for Eric. He probably already knew this shit because he's been trading for longer than I am. I'm only trading for like 3 or 4 months. But I know that Eric has been doing this for 5 years, so he knows this stuff. But I'll ask him if he maybe has some stuff, and I'll try to make a video in my free time, and then I'll do from beginner to intermediate about Elliott wave. And I'll tell you this: I wouldn't go long on any altcoins right now. I would only focus on Bitcoin, okay? please only focus on Bitcoin. You could try to play some IOTA or EOS. You know, I'll show you why IOTA, for example, because I didn't look at IOTA, but just on the top of my head, I think it's very, very likely for IOTA. Look, since IOTA has this clear support range here, so if you drop below 88 cents or something, then you could just stop yourself out every time, because then it's very likely to come down more. So rather go long on IOTA or something. I check BCH for you, bro. I'll do it. I've earned a decent amount of money with Bitcoin Cash, by the way. It's really really technical. I don't like these patterns, man. It's the same as Ethereum. It's the same. Look, this one broke like it should. It, like my first star got hit, then it broke this one. So I go back to Bitcoin Cash. So for Bitcoin Cash, I would first go to the 10-minute chart. I can already see this pattern, which I like. Oh, there's a gap, by the way, a vacuum. You guys can see there's a vacuum here. Okay. Here is where that rule set of I just explained you guys about yeah, give me a second, man. I gotta pay attention for myself because I might skill in some longs as well. Maybe start to potentially close my short positions, but so this looks like some kind of diagonal, you know, on the 10-minute chart. There is some bullish divergence, there is, but is this about to bounce? That's the question. I'm gonna measure this one for you. Could be. Yeah. Damon, what's your question? Could you say it? How do you answer that question? Which question are you referring to? By the way, I would be really scared to just straight up long this. I would like. I would like. Okay, for just so you guys know, okay, for Bitcoin, if you guys want a long on Bitcoin, please just wait for some kind of bounce. No, just wait for it to bounce first, okay? It's look at this, man. Okay, it did hit my channel bottom, so it has some support. But I want to let you guys know, like this ETF news, that's like a catalyst. Because it would be really fucked up. And it looks like it. This is not even an ABC. Already hit 1-to-1. Let's say this was some. So this is the 1-to-1. And this candle, man, I'm not gonna lie, but look at this volume. Volume is still expanding, guys. Volume is still expanding. You don't want to enter when volume is still increasing. You really don't want to do that, because there's then the odds that you're gonna cut your finger here. Because I know people were already entered the long here because they thought this was gonna be the bottom, and they already lost money here, and they didn't stop themselves out because they thought, oh yeah, I always, you know, Just like you guys showed you guys. You gotta stop yourself out. Because if you're gonna long stuff like this, you really want to wait. You guys, you know what you guys want to see? You want this to be finished like this, and then see this happening. That only has to be a little bit tiny like this, and this, and then you see the bullish divergence here. And then you enter your long at the first bounce retracement. Hopefully you see something like this. Boom, boom, boom. It gives you guys an idea. But I would not long this yet. Jesus Christ. I'm sorry, but this looks disgusting, guys. Like this really looks nasty. Oh my god. And I already felt euphoria, man. I felt euphoria when I saw that 8.4k. I'm glad I sold my Bitcoin. I'm really glad I sold some Bitcoin. I didn't sell all though. Now I was like, I wish I did. I could just buy them back and I had like almost 10% more Bitcoin. So okay, I'll switch back to Bitcoin Cash. Yeah, I would not long this at all. It is guys, when you see something break a trend line like this, and this here starts to get more likely, I would just wait. I don't need to catch the bottom for Bitcoin Cash. I like to have my candles like this. There's a reason why, okay? The moment you use red and green is when your mind starts to fool yourself. You start to see green, you start to want to buy. You see red, you want to sell. You want to get out, or you think it's gonna go, you know. I go back to EOS. EOS is my target, by the way. EOS is my target. Yes, I believe today I showed this for EOS. People want to long, and this was for EOS, and this is still in play. It looks like we maybe already hit it. Close to it, but guys, what you guys gonna see right now is small bounces first, and then maybe another sell-off. Looks like it starts to correct heavily, and let me check. Okay, I'll go to the 1 hour. First short target hit. $8.15, man, something like that. It's my first target. Yeah. It's scary, man. You know why this is scary? You can long here at this $8.10, $8.15 range, $8 something there. But you gotta be really consistent with just stopping yourself out when it reaches below $8, man. Because when it reaches below $8, then yeah, exactly. Going long on EOS right now is the same as a Bitcoin. You're thinking you're fooling yourself that you're gonna be the best trader and gonna catch the bottom right now, because you're not. Trust me, you won't. You might be lucky and you buy in and it bounces and you sell at the bounce. But I would advise you guys to I'll go to the daily, and Jesus Christ, I'm sorry. Can I wait? You know what? As you guys quickly, it's better if we screenshot this first. No. I'll zoom it slightly in a little bit more. And I'll make a screenshot. So I can remove everything. Hey James, isn't yeah, it could be. I just hope that this is gonna be this fourth wave. We see somewhere falling here, but like, I'll be honest. Like I hope for 7.7 and slightly below 7.8. So this range. I believe you can short VET on Bitfinex, or wait, you can't, or you can't yet because there's no margin traders yet. So I would definitely look to between 7.7 and 7.8. This is where you should have a try to go long with your stop loss at like 7.6 or something. You could actually ladder yourself in, but I would just wait patiently. It's really risky to go long right now already. And if this is gonna be furious, it's gonna be really furious because let me check. So many charts, man. James, you were with me, and Becky was here as well when we made this one, right? And it looks like it's might in play, but I hope it's not for you guys. I really hope that it's not gonna be this one, okay? I really hope it's not gonna be 1, 2, 3, 4, 5. I really hope it's not this one, but if it is, I can like show you guys an idea what's then probably gonna happen. If this is gonna be sharp 3, 4, 5, 1. Let's see this again. I'll give you guys an idea. It's gonna be a wave like this. And yeah, that's bearish, by the way. I would not go long on EOS right now. The only thing you're gonna, yeah, the only thing you can do with EOS right now, play the oversold bounces. Don't try to go long for the major upswing. Okay, you're not gonna do it. It's like I'm not gonna say this is really bearish, but guys, I show you guys. My bullish count is that we retraced to 7.5. Actually, there was the third wave, and then this is very likely, and this could take like a week. But on the short term, I expect 7.7, 7.8 to bounce, and then find some upper resistance here at 8.2, and then come to the 7.5. So you guys know that is for me very likely. And then I measured this thing out a lot of times, that this actually fits really nice. This fits with fibs and everything else. It fits really nice, almost too perfect. And this could be then the ABC, like this. And I believe this also hits like almost, yeah, I like that it's close to 1618. So yeah, you could try to catch a falling knife here. I would like to wait for the first bounce, then it retrace, and if it retraces 618 on a lower time frame, you can just go long. But right now, it looks like you're just gonna fight with the bots. Yeah, the only thing you can do right now is to scalp the 5% bearish divergence or bullish divergence. Probably bullish divergence. Oh shit. Hey guys. This broke, by the way. And it retested it as well. So yeah, it's even likely that this hits oversold on the 6 hours. Before you want to go a really big position long, but I'm probably gonna do this one when the 40 EMA comes here, hits the candle. Yeah, I'll probably enter some longs here. I'll stop myself out below 7.650 and then just look for 7.5k entry. That's probably what I'm gonna do, but also looks like this zone here failed. And guys, we hit 65 fib to the tick. Stopped out everyone here. Retraced. Everyone went long here. Stopped them out here as well. Boom. Wick down. Now we're at the possible long entry zone. And the reason that this is a possible long entry zone is because when we go to the weekly, I believe, we also have this horizontal. So look at the left. So this gives you a reason why 7.7, 7.8 is a very likely support where you have weekly support, guys. So 7.7 to 7.820 is where we have weekly support. And below the weekly support level, you should have a stop loss, stop yourself out, and then just re-enter the first bounce after. It's alright. It's alright to get stopped out. It really is. If you wanna be a trader, at least. If you wanna be an investor, you can just buy. You don't even have to look at it. You can just buy and just go on holiday. Okay. Damn. The RSI even got the throw under, like you like to see. So yeah, I would wait 30 minutes, wait for the daily close, see how nasty the daily is gonna close. Looks like it's gonna close above this weekly horizontal support as well, and just wait, because if this is one bearish candle, most likely we get three. We get 3 white candles with 3 bearish candles in a row most of the time. We're gonna get those 3 black crows on the daily. That's very likely. Is there, guys? You guys got like a quick coin you want me to look at? I can look at US again, but all you're gonna see from my end is that I'm gonna hit like $8.40 and then probably retrace and hit like $8.10, $8.05, and maybe even below the $8 ranges. I wouldn't be surprised at all, because I know EOS. I have been trading EOS a while, and yeah, James, we are on a wave 3 of a C. That's what. That's where I am. I just went over 0x, and 0x is still the same. Like, yeah, my bad. Okay, that's a lot better, I guess. That's a little bit better. So, for example, 0x, like I told you last time, Cigar, it's still the same pattern. It looks like it broke support actually. I went over 0x. By the way, the reason you can already probably say that it's probably already Bitcoin Cash is already giving it away, and then it's very likely for Bitcoin that this was a third wave, finished right now. It started to consolidate. 1, 2, 3. Okay, 1, 2. Yeah, okay. And let's see how overextended this one is. This one was pretty furious. It really was. This looks more like it. There. No, it's still finishing. It's still what I expect here, guys, is it's gonna take a little bit. I'll probably what you guys are gonna see here is boom, something like this. You're gonna see like this, and it's not gonna. Okay. These are the ranges that it's probably. And here we should find some support, I hope. It would make sense. With, like, technically, this support make a lot of sense. Another reason. If this is third and fourth, by the way, which I hope for you guys. Then I could technically say this makes a lot of sense. If this is third and fourth, if this is not a fourth wave, from that this is a finished 5-wave structure, and we still get the same kind of range. Okay. Yeah. Most of the time the giveaway is that this is the first one. No, you get a second one, and sometimes a really small one here. Most times it comes like this. Okay. This is most of the time what you will see. So one like this, boom, second one, and then it slows down and it starts to dry out, and you see a bounce, and this goes like this, or could hit like this, could, but very likely it's gonna hit like this, and then this is gonna be retest of this, gonna go up or down. But when this goes down, then if this doesn't bounce here, somewhere here, then I don't know, guys. I don't know if this is still gonna be the case. If this doesn't bounce, if we don't bounce at this range, then it starts to get more likely that we're gonna see lower lows. But for now, it still looks bullish. We can still see the bullish potential here if we get here and bounce. Okay. Yeah, exactly. This looks like an ascending triangle, by the way. Yeah, for sure. Let's for fun. Let's check if this. Well, yeah, there you got your patterns, you know. 1, 2, 1. Already. So yeah, technically, this was the breakout short when this broke this support level where you would go long, for example, with your stop loss at the C or whatever you want to call it. Could be really nasty. You could flip short, but it's still nasty, man. Okay, well, Bitcoin Cash looks like it's gonna set in its fourth wave, which could come to down here somewhere. There could be some potential there right now. I think everything is gonna start to move up right now. And these, Guys, by the way, the giveaway right now that we didn't really bounce, in my opinion, is that we don't see these massive buy orders. And all the trading right now is probably bots. So it's just bots buying the retracement, pushing it back up, consolidation for the next breakdown. So to give you guys an idea, for EOS, it looks like EOS didn't move at all, actually. Bear flag. Yeah, we did hit a 1-to-1, but I've seen many times that you hit 1618. Honestly, yeah, I've seen that before, many times. More often than you want. Let me check. I'll just show you something like EOS is that I like to use my physics all the time, and when I see stuff like this, I can see this, and I paint this in my head all the times. Is it a hammer like this, or is the dragonfly like this? This doesn't mean anything yet. It just means that we got some indecision right now. And I believe everyone is waiting for the daily close as well. And I've told you guys before, man, we always see some action before the daily close, and 1 to 2 hours post the daily close is when you start to see direction, most of the time. From my experience, this is just my experience. You don't have to follow it, but just wait for that confirmation. You know, at the daily close, the 4-hour closes, the 6-hour closes, the 12-hour, like all these big major time frames close. Then you see the RSI. Can give you a pattern. For EOS right now, the reason I see this like this is just like you see this here, continuation. This was the only time. Oh, this wasn't even a triangle. See this triangle? But this here could easily look like this because we see this. And then the sad part is that this ends at like $5.50. Something like here. I'm gonna go to the gym still. Just I think about it. Oh shit. Guys, I'm gonna go to the gym. I'll be back in like 1 hour or something. 1 hour and 25 minutes. And then as the daily closes happened, and I'll try to see if I see some direction, okay? And I'll put on the live stream again, okay? If you guys don't mind. So I'll be back in like 1 hour, something like that. 1 hour and 20 minutes. Thank you. Thank you. I hope everything was that you guys where would I set my buy orders at? Well, I would say between 7.7 7.8 is where I would like to go long. And I hope things I provided you today were useful, and try to apply them, you know, like really try to apply them with like $5 or $20 or something. And these are just strategies of mine, and they're probably strategies of other people as well, but I'm giving you these strategies to you guys, and I don't like I share charts and this and that, you know, but these things are really important. And really, guys, just have a stop loss. Who you're trying to fool? Like, honestly, who you're trying to fool? If you think you can beat me with trading, come on. It's good. We can do 1 week, and you can try to beat me. And I'm not saying I'm better or whatever, but let's see how often you're gonna get stopped out. And like it's not about winning every train, but it's about that consistency. Every time you go into a trade, boom, stop loss. Okay, boom, stop loss. It's really consistency and discipline. And then you can probably even beat me, because I still make those mistakes, and Eric does as well, and other people do as well, and the really good traders as well. And there's just some people who just win every trade and have this discipline. They are there, and I make big losses as well. So just take those stop losses, get stopped out for 0.5%, stick to that 1% rule. Yeah, I can do it with $5,000. It's not really a problem. Depends what you want to trade. 1 week. At least someone who is willing to do it. Yeah, but then I wonder if you get the scalper tool. That would be also unfair. You're gonna use the scalper tool. Yeah. But it really is who has the better risk management and who has the better entries. And who uses better leverage. Because if I use BitNex and I'll pull out some 100 leverage trades, I can dwarf you in 2 trades. If I you know, I'm really patient with my entries. It's not to screw you guys over, but like, yeah, it would be really unfair if like I just do 100 times leverage and I already won with this one with shorting from 8.4k to like this range, and you don't even have an entry yet. No, that's like, it's really unfair. But yeah, I'll be back in like 1.5 hour, 1 hour, something like that. Take care, and try to apply this stuff, man. Really apply it. Stick to the stop loss. Try to count those waves. You don't have to be really accurate, but try to get the patterns in, because I showed you guys how to measure it, and you can just label it 1, 2, 3, 4, 5. Try to see that overlap. Try to see that price go like that, price higher. See some divergence on the RSI. See the volume drying out. If you can see all those things line up, take the risk. Take that stop loss. Okay. Take care. Have a nice day for now, and I'll probably be back in 1 hour, 1.5 hour. Take care. Be cautious. Cheers.